Hey everyone, welcome to Vantage Educational Session. So for today, we will be covering our Bollinger Band series. So for this, we are covering mainly on Bollinger Band strategies for major currencies. Right, so I'll just give it about 1 to 2 more minutes for more people to join us before we get the session started. For those of you guys who are here with us, if you have any questions, right, please feel free to put them under the questions chat. Okay, so for today, we are covering mainly on major currencies, right? So our focus will be looking at charts on euro dollar, pound dollar, dollar yen, Aussie dollar, trying to understand if there are any movements or factors behind these currencies from a technical analysis perspective. We will also take a look at price action and volatility patterns, right? To see how we can actually incorporate Bollinger Band strategies for the currencies, as well as looking at timeframes across our Bollinger Bands, right? So what are the different timeframes that might be suitable for trading this? So in general, if the currency is more volatile, right? So we're expecting wilder swings. One way to gauge its volatility would be to take a look at its average true range. So if the currency is moving maybe on average 5 to 10 pips, right? So let's say maybe your euro dollar, right? As compared to, let's say, the yen, dollar yen, right? That might be more volatile. Each ATR might be a lot wider. So in that case, we want to consider that more volatile currencies. We want to apply this Bollinger Band indicator on higher time frames so that it helps us to filter out the noise, right? So that's another thing that we will take a look at across the different currencies. Our focus again is on mainly majors because majors themselves are more liquid, they're highly traded, right? So those are the ones that we're focusing on for today. Okay, so before we kickstart the session proper, right? Let me just do a quick introduction of myself. Okay, so I'm Lee Sing. I provide FX advisory to institutional clients. You can also find me on LinkedIn. So if you have any questions with regards to the previous recordings as well, right? If you're watching a recording of this on YouTube, right, please feel free to reach out to me on LinkedIn if you have any questions. So just a quick disclaimer, right? The information presented here is not to be treated as investment advice. It's for educational purposes only. So along the way, when we go through this content, if you guys are here with us live right now, and if you have any questions, right, please feel free to put them under the questions tab. Okay, so this is the agenda that we will be covering for today. I will first start off with a quick recap on Bollinger Bands, right, for the benefit of those who are not familiar with the tool. So essentially what Bollinger Band does, right? So how we can actually use Bollinger Band in our technical analysis. And following that, we will take a look at the characteristics of each major currencies, right? So we won't take a look at specific currencies, but in general, what are potential factors that can drive them, right? More from a fundamental perspective. And from a technical perspective, right, of course, there are a few factors to consider. So for one would be the volatility of each currency, right? So as I mentioned, if the currency is more volatile, you want to consider applying this indicators on your higher time frames, right? Given that your lower time frames, it's likely that price would either sweep the lows or highs, right? Or even there's just a lot of noise in the market on lower time frames. So if the currency is extremely volatile, right, or you have higher average true range, then you want to consider putting this indicators on a higher time frame. So for example, comparing 4 hours and 1 hour, right? So if dollar yen is a lot more volatile, I want to consider trading it on a higher time frame, for example, on the 4 hours instead of the 1 hour. And following that, we will also take a look at historical price action, right, and the volatility patterns for these currencies. So for this, we will be hopping on to our charts on TradingView. Okay. So Bollinger Bands by itself, right, they provide valuable insights into price. There's also potential for price reversals. So if you take a look at Bollinger Band on TradingView, right, or if you just load any charts, right? It doesn't have to be on TradingView, it can be on MT4 as well. In general, you can see that this was what we covered last session, but this is basically how a Bollinger Band looks like. Right, so you can see that there are 3 bands to it, right? We have the middle band, the upper band, as well as the lower band. Okay, so your middle band essentially is made up of your 20 simple moving average, right? So this tracks moving average for the past 20 periods. So in general, right, you can just think of it as simple moving average, right? So that's the orange line that we have. And then we have our upper band and lower band, right? So upper band itself, it's 2 standard deviation away from your middle band. And likewise, right, our lower band itself is also 2 standard deviation away from our lower band itself, it's also 2 standard deviation away from the middle band, right? So that's the general idea. And when we take a look at how Bollinger Band it's formed, right? So this is actually a popular technical analysis tool. This is founded by John Bollinger, right? So you have 3 lines as we saw in our earlier slides. We have the middle band, right? So middle band itself is usually calculated with the 20 simple moving average, your upper band and your lower band. Excuse me. So upper band itself, it's formed 2 standard deviation away, above and below your middle band. So that it's for our tool, right? So middle band itself, it's usually the average over our specific period, as we saw earlier, right? So if you take a look at just moving average in general, right, how we can take a look at moving average is that when price crosses above the moving average, right? So moving average itself, basically it's a measure of the trend over time, right? So this itself is a trend following indicator, which means that when prices are above the moving average, right, in a trending market, right, we can interpret this as a bullish signal, as potential for price to move higher upwards, right? And if it crosses below the moving average, then it's a bearish signal, right? We could see price move lower. So in general, right, when you look at moving averages, of course, we have to deal with the problem of fake outs, right? So if prices are holding above a moving average, you can see that every pullback to the moving average itself, right, price could wick slightly lower before it continues to the upside. So in this case, right, this would give or generate false signals, right? So this signals itself, right, price could tap lower, could break lower below the moving average before it continues to the upside. So in such cases, right, one thing that Bollinger Band can help in this, right, is that when it creates a 2 standard deviation, basically think of it like a channel, right, with 2 standard deviation away from the middle and upper band. What this shows is that it gives us more room, right, to work with this channel as well. So in an uptrend, you can see that when price comes or crosses below the moving average, right, we could see price push slightly lower to the middle band, to the lower band, right, before moving to the upside, right? So with this example, let's take a look at our previous slide and see if we can identify that. Right, so let me just clear this. Okay, so in the same example that we had, right, so when price, right, so for those of you guys who are looking at market structure, we can see that the break of market structure, or when price starts forming consistent higher lows and higher highs, this is a sign that we're in an uptrend, right? So we are seeing clear signs of structure being formed over here, price breaking above the high, forming our higher lows and higher highs. That's one, right? But another thing that we want to consider is that once price breaks above structure and form this bullish market structure that we're seeing, one thing to note is that you can see that if you're just using solely moving average alone, right, when price crosses below the moving average in this case, right, this could give us false signals, right? So this could be a sign of sell if you're just trading solely based on moving average. So which is why, right, much as it's important to combine market structure, having Bollinger Bands, right, plotting this upper and lower band itself, 2 standard deviation away from the middle band, right, this gives us room to work with, right? So essentially in a bullish market structure, even when price crosses below this moving average, right, we know that when market is bullish, our highs themselves are weak, they are constant targets. So when price breaks above this moving average, right, we can wait for either a retracement to the lower band, right? So lower band itself will indicate signs of potential reversals, and more importantly, it's in line with the higher time frame, or it's in line with the general direction of the trend. So that's one, right? So when price comes into this zone, right, we can take long positions, entering into the middle band in a more bullish market structure, right? And what we can do with this middle band is to use it as a confirmation. So 2 things to note here, right? Looking at this example, you can see that in a bullish market structure, price barely pulls back to the middle band, to the lower band, right? You can see that once this bullish market structure is being established, right, we hardly see any pullback back into the lower band, right? Usually it just fluctuates around the middle band, continues higher, and this highs, right, the upper bands themselves are constant targets, right? They are weak, and we can see that price breaks through it, right? So if you're looking at Bollinger Band breakout, we can be taking very slight scalp above this as well. But what we can notice here, right, is that you can see again, right, when price starts forming your lower lows and lower highs, clear bearish market structure. Once that is formed, you can see that these highs themselves or the upper band, right, can be used to generate sell signals. And we can use the break below the middle band as confirmation, right? So if you want to wait for a confirmation instead of taking the setups directly, right, you can actually wait for price to band, right, or even crossing below the lower band. And once price breaks above this middle band, right, that would be the confirmation. Okay, so the first step is to again incorporate your market structure, higher lows, higher highs. That will give you a general direction of the trend. You can just take any 5 points, right? The last 5 points that we've plotted out. So compare the 5 points, right? If the subsequent highs are higher than the previous high, right, and the subsequent lows are higher than the previous lows, then that in this case gives us a bullish structure. And of course, right, when we do this, we want to apply it on the higher time frame. The reason for that is because if you go to the lower time frames, right, if you're on your 5 minutes and 1 minute, you can see that the structure changes most of the time, right? So when price comes into a higher time frame, demand or supply zone, and we are seeing that structure change on your lower time frame. So we use the higher time frames to help us to determine the direction. It can be on the 4 hours, the daily, right, depending on your holding period, right, or your how long you're holding this trade for. So if you're trying to trade or doing swing trading, right, as compared to intraday trading, then for swing trading, when your position, right, your holding position is much longer. In this case, what you want to consider is that you want to consider putting it on the higher time frames, right, your 4 hours, your daily. Okay, so that's on Bollinger Band, right? So using the middle band as confirmation. Okay, so let's go back to our slide. Okay, and the next thing that we saw, right? So the lower and upper band itself, they are dynamic, which means that if it adjusts according to price volatility, the more volatile prices, you can see that the width between the upper and lower band becomes wider, right? So during periods of high volatility, you can see that the width with the upper and lower bands, right? Periods of high volatility here, right? The width between them, it's much wider. But if you're seeing periods of low volatility, right, you can see that we are seeing a much narrower band, right? So the upper and lower bands are closer together. Okay, so again, right, in terms of how we can interpret them, if price touches the lower band, right, we can consider it a bullish signal. Of course, right, I want to emphasize that we need to again include other tools, right? For example, looking at the general direction of the trend, market structure, right, instead of just solely trading this in isolation. Okay, so when price touches the upper band or the lower band, right, we can interpret them as overbought and oversold signals. So when price touches the upper band, right, so if you're trading within the upper band, when it touches the upper band in a bearish market, this can be used to generate sell signals. Likewise, when price touches the lower band in a bullish market, right, when prices are forming higher lows and higher highs in a bullish market, as we saw earlier, you can see that in a bullish market, right, price barely pulls back to the lower band. Right, so again, if we take a look at this, right, you can see that once there is bullish market structure being formed here, right, we rarely see any pullback to the lower band, right? So any occurrence, right, when price enters or price comes near this lower bands themselves, right? In this case, right, this can be used as signals, and when price breaks above this middle band, we can use them as confirmation. Okay, so that's on Bollinger Bands, right? So that's just in general. Now let's take a look at specific charts, right? So we want to focus mainly on euro dollar, pound dollar, dollar yen, and Aussie dollar, right? So let's take a look at them. So for this, I will open up Trading View, right? So let me just give me a moment when I open up this. And if you guys have any questions throughout the session, right, just put them under the chat. Okay, so let's take a look at that. All right, so let me just load the Bollinger Band. Right, so for a start, let's take a look at euro dollar. Okay, so I'll just remove the rest of the drawings. In fact, let's just put them on another chart. It's probably easier that way. Okay, there we go. Okay, so on Bollinger Bands, right, you can see that, right, first thing to note is in terms of market structure. So as I mentioned earlier, the higher time frames. So right now we're on the daily time frame. You can see that the daily, weekly would be useful, right, in helping you to determine the general direction. So if market is moving to form higher lows and higher highs, right, on the daily or weekly time frame, then on the lower time frames, right, on your 4 hours, 1 hour, we're trying to find entries for long, right, to play in the direction of the trend. Or if price comes into a supply zone and it starts consolidating, then in this case, right, if you are playing intraday positions or even scalps, then you want to consider taking this short-term pullback. So a lot of it depends on the holding period, right, and your style. So let's take a look at this example, right? You can see that for one, right, we have, when we move to the left, you can see the general structure of the market, right? It's bearish, it starts forming lower lows and lower highs coming into this area. And what happens is that price then consolidates, it breaks above the previous high, right? And right now it's continuing to the upside. So that's one. And another thing to watch is that when price breaks above, right? So that's the first sign of change in structure. You can see that once this happens, right? So previously when prices are forming this bearish market structure here, right? So I believe this is not just for euro dollar, but in general, you can see that when price starts forming your bearish market structure, right? Once you have determined the overall direction of the trend, you take a look at the upper Bollinger, the upper band, right? So once price comes into this upper band, right, this can be used as sell signals. And one thing to note is that when this bearish structure starts forming, you're seeing very clear break above the lows, right? In a bearish market structure, the lows are weak, and you can see that the lows are constantly being broken. So once this bearish structure is being established, you can see that for this whole move itself, right, this is anywhere between June to July. It's about a month, right? So this whole period that we're seeing here, from the time where price comes into the middle band and then reverse below the middle band, right? So essentially treating this as a dynamic resistance to when price pulls back and taps this upper band again, right? It's about 37 days, so roughly more than a month, right? About 1.5 months. So you can see here, right? So the point is that when prices are in a downtrend, you can see that it hardly pulls back into the upper band, right? So any upper band, right? And once this bearish structure is being established, when price comes into the upper bands on the higher time frame, right? This can be useful signals, right? So that's one thing to watch. Again, right? This it's with the assumption that there is already a trend, right? That's in place. Okay, so that's one. And the second thing to watch is that you can see that in a bearish structure, right? These lows themselves, right? This lower bands, if price taps into the lower bands, sometimes we're just seeing that slight pullback before price continues to the downside. So one way to look at this is that if you are thinking of automating this, right? If price comes into the lower bands, right? This can be potential profit targets or even trailing when you start trailing your profits. So whenever price comes into the upper band on the higher time frame, right, this is when it can be potential signals, and we can target the lower bands here. Right? So when price crosses below the lower band, I'll just set it maybe 5 pips above the lower band, right, in a bearish market structure. So when price comes in here and we're seeing that change in market structure, you can see that price then forms and breaks above the last high. When that happens, oops. Right, and when that happens, you can see that price hardly comes into the lower band. Right, so in a bullish market structure, in fact, throughout this whole year, right, from October, no, about 6 months, right, about this, no, more than that, yeah, about 6 months in, you can see that price hardly comes into the lower band, right? It just taps into the middle band at best. If it continues to the upside, we have one sign over here, and this is when you're seeing clear bullish market structure. So again, right, if price comes into the lower bands in a bullish market structure, this can be used as signals targeting the upper bands. Okay, so of course, this is on the higher time frame, right? Once you have established your market structure, right? If we use the same logic on the lower time frame, right? Just trading just in isolation, just one time frame alone, looking at this logic with no clear market structure or direction of trend in place, you can see that this would not be as good on a lower time frame, right? So let's take a look at it. For example, on the 15 minutes. Right, so on the 15 minutes time frame, right, ignoring structure, you can see here, right? So if you're just trading based on lows and highs, you can see that when price breaks above structure here, right? Price broke above structure. So then what happens is that the middle bands would serve as buy signals, right? When you start having higher highs and higher lows. But of course, this is on one time frame and it's on a lower time frame. You can see it's on a 15 minutes time frame. So again, right, we're not actually taking into account the higher time frame's direction, right? So if you go on to the higher time frame on your daily time frame, you can see that once there is a change in structure, which happened here, right? So last week we went through the analysis on euro dollar, right? And also explained just in terms of supply and demand, right? Looking at the through and that change in hands between demand and supply, right? Why it's bearish. So yeah, we explained on that, right? But basically, if you look at it in terms of structure, right, on the daily time frame, prices starts forming higher lows, higher highs, and then it starts forming equal highs here, right? You're seeing your triple top, and that confirmation comes in following the break of the neckline, which is this area, right? So you can see that this was a zone, even if you put it in a close price. You can see that basically it was a previous support and resistance area, right? Price came in, we saw that consolidation around this area as a support before price failed. So this itself, right, accompanied with three equal tops, we're seeing slight sweeps. If you take a look at it in terms of its wick, you can see price swept slightly higher above the previous high before it continues to the downside. So in this case, right, we're seeing that change in structure happen so that it's bearish on the higher time frame, right? So if on the daily you are more bearish, right? If you go down to the lower time frame, you can see that on your 1 hour or even 4 hours, right? The price hardly comes into the upper band, right? You can see that price hardly comes into the upper band, but the lower bands themselves are constantly used as potential targets, right? So if you are taking any sell signals based on the middle band or even the upper band, right? This lower bands can be potential targets. But it's also important to note that while these lower bands can be potential targets, right? Unless price comes into a higher time frame demand zone, if not just looking at this alone, right? You can see that any pullback coming into the lower band, right, might be very slight. At best, right, we could see a pullback into the middle band, or even if we're seeing more aggressive moves, price could push back into the upper band. But you can see that when price tests the lower bands, right, we could be seeing signs of this as well, right? Just very slight consolidation, right? Very weak consolidation, right? Price reacting to it, potentially some sellers taking profits here before it continues to the downside. Okay, so that's the picture on euro dollar, right? Let's take a look at Aussie dollar. Right, so if I take a look at Aussie dollar, you can see pretty much the same thing. Just use a different chart so that's cleaner, right? So in this case, right, again on the higher time frame, you can see, right, price again starts forming lower lows and lower highs. This is the picture on the weekly time frame. You're seeing price just looking at support resistance areas as well, right? Price testing this support and resistance zone, right? So if I paint out the price movement, price consolidating twice, breaking above it, reacting, broke below it, and currently it's hovering below this area, right? So that's the picture on the weekly time frame. If you go to the daily time frame, you can see the same thing as well, right? So another thing that we would like to watch, right, would be on market structure. You can see that currently it's trading within this leg, right? Price forming equal highs, basically within this range, right? And yeah, equal highs, right? Tested this zone, right? So currently on the daily time frame, this is the range that we're seeing. So price could push deeper, right, into this demand area here. That's the picture on the 4 hours, right? You can see that we have price forming or coming into this zone, breaking below the low. And again, right, once you're seeing this extreme move, of course, this is also triggered by fundamental events, right? So dollar index has been on a pretty strong move up, right, as concerns over the debt ceiling start to ease. Okay, so of course it's driven by fundamentals. When dollar it's more bullish, right? Then Aussie dollar itself, right? It's dollar denominated, becomes more bearish. Okay, so there are also fundamental news drivers to this, right? So in this case, you can see that again, right? When it starts its bearish move down, especially right accompanied with this huge move down, what happens is that in this case, right, we can see that there's hardly a slight pullback here. Right, so that's another thing for us to watch, right? So these are all things that we need to consider, right? So other fundamental drivers, apart from just looking at dollar index, right, or the performance of dollar, other things that you want to consider would be, for example, interest rates, right? So interest rates themselves, when the central banks are more hawkish, right, then usually it supports the currency. If they're more dovish, then you can see that usually the currency tends to weaken after the announcement, right? So a lot of it is also based on the tone, right? Whether there are any signs of the central bank raising rates further, or if there's a pause in rate hikes, of course, right, then there's also economic news releases. So for example, right, key indicators would be your inflation data, right? So if inflation data starts easing, then there's less of a reason or less pressure for the Fed, not Fed, but central banks in general to raise rates, right? So those are things that we want to watch as well. And also the labor market, right? So if the labor market still remains relatively tight, right, amid all this uncertainty, then there's more leeway or there's more room for the central banks to raise rates. But if labor market is relatively weak, then that's something that we need to consider as well, right? So those are all factors that can affect the currencies, right, just from a fundamentals perspective. So yeah, the economic calendar is something that we have to watch closely. So which is why when we do our live analysis session, right, we always go on to the economic calendar to take a look at the key events that are coming up, especially if you are taking shorter term trades, if you're taking like scalps or even intraday trades, right? And economic events can be unpredictable in terms of the price movement, right? Sometimes we are seeing that huge move up represented by very strong wicks before price goes the other way. So in such cases, right, how do we actually manage our risk and how do we protect the existing position? So that's something that we need to consider. Okay. So in general, when you're on the higher time frame, right, of course, the higher time frame itself would be a lot less choppy as compared to your lower time frames, right? If you're on the 5 minutes, 10 minutes, your stop losses might be much tighter if you're taking shorter term trades, right? So in that event, it's more susceptible to this high volatility news impact. Okay, so yeah, that's dollar, right? That we have. So another thing to consider, right, when we talk about central banks, apart from just looking at central banks by itself, right? So for example, on Aussie dollar, you want to look at RBA, Reserve Bank of Australia, right? And for US, you look at Fed, right? We also need to consider the interest rate differentials between them. So for example, right, if Fed itself have less of a reason to raise rates, whereas let's say Australia, right, or even Europe, right, if in the Eurozone, right, if economic data it's showing signs of improvement, and you can see that inflation still remains persistent, then what happens is that there is a higher chance that ECB will continue pushing rates up. And if Fed itself is showing that inflation data is cooling, then what happens is that then when interest rate differential starts to narrow, that's also when there is it helps or support the move. Okay, so that's another thing that we will need to watch. Okay, so back to Bollinger Bands, right? We also talk about price volatility and potential price reversals, right? So in this case, on Aussie dollar, you can see that when you're in a bearish move, right? Just looking at price action in a bearish market structure, right? Any pullback into this zone itself, right? Into the upper band, it's rare, right? Likewise, you can see in an uptrend, so you can see this bullish market structure form, higher lows, higher highs, right? You can see that this middle band itself serves as a pretty good dynamic support. We hardly see any pullback into the lower bands, but you can see that this middle band, right, can serve as support as price continues to trend upwards. So let's take a look at dollar yen, right? So we talk about different volatility pairs, right? So you can see on dollar yen, right? Dollar yen's characteristics is slightly different. If you take a look at where we are for the past month, right, or at least the past 2 weeks, you can see that when price consolidates, so it came into a demand region, starts consolidating here, right, and of course driven by fundamentals as well, right? So dollar has been trending up strongly for the past 2 weeks, and in this case, you can see that when it starts trending strongly, we are seeing hardly any pullbacks, right? Very slight pullbacks before price continues to the upside. And even if to just move back slightly, you can see that for the past year, that price has been trending strongly. Oops, excuse me. So this area here, you can see that for the past year, when price trends strongly up, right, this whole move up here, you can see this move, right? So this move itself is about 15%. Right, so you can see that this whole move up here, right, what happens is that if you're on the higher time frame, let's say on the daily time frame in a bullish structure, again on the higher time frame, you can see that the upper band, right, it's constantly being violated, right? So price wick above it before we see that slight pullback, coming back into the middle band again, and then once again that's slight push up. And the only time this again shows a difference, right, it's when you are starting to see the change in structure, right? So again, higher lows and higher highs being formed. You have a new low that's being formed over here, right? So we focus on this portion of the chart, right? If you go down to the 4 hours, you probably see this clearer in terms of the structure change on the lower time frame. So you can see here, right? So equal lows started to form, right? So again, the assumption is that if the uptrend is to continue, price should continue breaking above the high, but you can see that this didn't happen. And what happened after that is that price broke below this low, right? So that change in structure that we saw, once price breaks below this low, again, right? When this bearish structure starts forming, and this, it's actually a daily confirmation, right? When price breaks below it, you can see that it hardly pulls back into the upper band, and pull back into the upper band themselves can be potential signals, right? Over here. And then once again here. Okay, so something to watch, right? So one thing that we need to keep in mind is that when we look at the structure, right? So when price comes into this zone, right? Of course, a lot of this is on hindsight, but you can interpret this price coming into this area, right? When it breaks through to this zone, this itself can be a potential change in structure, right? When price breaks above this. So what happens is that when price goes beyond this level, above this band, right? Again, we want to go to the lower time frame. So there are a few ways we can watch this, right? One way to look at it is that we might not have caught this area here just because of how prices were reacting here, right? So if you are tracking it just based on the last 5 points of highs and lows, then in this case, this would have registered as a bullish structure because of the break above the last high. So this itself wouldn't have generated a signal, but you can see what happened, right? So this is the last low that's being formed. So the break in structure or the bearish signal comes in here. When price breaks below this low, you can see that this is the first sign, right, of a bearish structure. So again, right, so the activation comes in over here, right? So once this bearish structure is being established, then any test of the upper signals, right? Of course, we don't want to take it again just in isolation. If you want confirmation on the lower time frame, right? Let's say on the 4 hours time frame, right? We can go down to the lower time frame. So let's say the 1 hour or even the 30 minutes. And again, look at the same change in structure, right? So if I were to go back slightly, you can see that that was the 4 hours, right? So right now I'm on a 1 hour time frame. So on the 1 hour time frame, we can see the same thing, right? So if price comes into the upper band over here, right, we want to wait for a change in structure. So again, you can just use the same point, right? Identify the last 5 points. This is the lowest point. So when price breaks below this region, right, this can be using a sell stop, right? So if this area fails, then we take a sell stop here. That's one, right? Or looking at pullback into this zones, right? So into the upper bands. So there are a few ways we can work with this, right? So depending on the characteristics, right? So if price it's one, or if the currency is one that is extremely volatile with hardly any pullback, then in this case, you might want to consider activating stops, right? As entries for confirmation. If your currency is, for example, one that tends to range quite a bit, right, before it moves, then we might want to consider, right? So if it ranged quite a bit, right, you can use the lower time frames as your confirmation. So let's say if you are bearish on the move, right, we can wait for a structure change on, let's say, the 1 hour or even the 15 minutes time frame, right? Or even something as simple as a break below the middle band as confirmation before price moves down. Right, so a lot of it also depends on the currency. Okay, so that's what we have for today, right? I see that we have no questions, right? If we have no questions, then that's all that we have for today. Okay, so yeah, so okay, I see that we have no other questions, right? So yeah, for tomorrow we will be doing our live analysis session as well, right? So if you guys have any questions after, right, please feel free to put them under the chat, right? If not, that's all we have for today. And for tomorrow, right, you can also sign up for the session at vantagemarkets.com/webinar. Okay, so thanks everyone, right? Have a great trading week ahead, and we will catch you guys again tomorrow.